Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Thursday, March 23rd, 2023. Great date, huh? 3/23/23. So today, again, kind of extremely interesting. So I kind of want to dive right in because I've got some interesting things I want to share. And so coming off of that high yesterday, I was feeling very strong about, wow, great rejection. All looks perfect. Wave pattern looks good. We need a little 4, and then we're going to come back down, put in an additional new low below what we did yesterday, be done with that first wave down, and then rally in a 2. Well, the best laid plans, as they say. What the market ends up doing is going up and challenging that spike high that we did yesterday up to 13,080, let's see what it was, 82, 13,082 yesterday, slides all the way down to reach a low at 12,678, starts to come up what I'm thinking should be a 4, and then drop back down and start the next layer down. What does the market do instead? It goes up and challenges that high. Just because I wanted to see what it all looked like, because you can see the bars were strong. The bars were strong right up to that top. And that wasn't a spike. You see the whole bar close up there. So I came and went in and took a look at it on the line chart and look at the difference. So here we are still in wave 5, but I want you to say, I'm going to leave it there for right now because so many algorithms and everything function off of that high yesterday at 82, and versus today at 12,000. What was the high? 13,006 being the high today. So it is a big enough difference that on this chart, if you're running fibs, it makes a big difference. But on an Elliott basis, on a closing basis, I can push this, and let me take it back and I'll show it to you. Sorry for changing that. All right, 1, 2, 3. This is a clean. We didn't go below it. So it's ABC. It's a 4. And then we start to rally, and then we put it in here. It creates a new high. It peaked, and we got the same reaction in terms of a rejection coming right off of that high. But again, interrupted after hours based on, I believe, what Janet Yellen was talking about or somebody else, or something is being news driven. So there's algorithms pretty much running all market hours, after, during, etc., that are picking up news and reacting to it. Because suddenly there was this big rally after the close. I was like, well, what the heck is that? So, but nonetheless, if I switch it to this, then what we've got is a 1, 2. Very small, but possibly a 1, 2. Going back, right now I'm going to leave the labeling as is, but do not be surprised. We're running out of reasons for the market to pump itself higher. And so it's like, can we just all gather around the campfire and do whatever we need to do to come to the realization that everything that comes out from the Fed or the FDIC or the Treasury should not be interpreted as like, that's good news, it's bullish, it's bullish, it's bullish, because the way the algorithms are acting, the ones that are really constructed around news, would appear to be like whatever comes out, just hit. If it's from the Fed, the FDIC, or the Treasury Department, and has anything to talk about the banks, press the buy button. Or buy it. I don't know how it's all set up, but in any case, that's just the reactions, that the type of reactions we're getting. So it all becomes kind of really screwy. Now, if I have to leave this here, then still it could be a 1, 2. But what do we got going again? 1, 2. So how many of these do we need to do before this thing eventually just keels over? Because they continue to drive it lower, folks. It's not just some made-up thing. The market runs it up, and then they run it down. And when they're running it up, it's clear they're going after stops. Today, they were up here above 13,000. In fact, they thought they would get them out of the way and put it at 13,005. went up, took them, got it, and then sold immediately, and then picked up steam as it went down and actually got close to just going below yesterday's low. And in fact, in the S&P, it actually did move below yesterday's lows. So this is the confusion and what we're seeing in terms of like, well, how am I supposed to make out of all of this? It truly is a market that is firmly being controlled by volatility. And not only volatility in all of the various VIX indexes, and then how those are hedged and what they produce when volatility drops and hedges need to be lifted, or volatility rises and hedges need to be put back on, or different, the different things that need to be done that get adjusted around that volatility number. So, and then options trading, and then all of the things that are happening right now, and they're all just trying to figure out what seriously is going to be happening with the banking system. We get different things coming out each day. Today we got Square, of doing things illegally with their books or whatever, something like that. And the stock just turning and taking a complete nosedive, rallying and then nosediving. It's like the volatility is for real. And the algorithms are having a wonderful day, having a wonderful time. And if you really can just move with the market, you have a really good day. So trading wise, I must say, trading wise, wow. The moves are stunning and they're real. So getting in, even for a part of it, has produced some exquisite trading. Back to the hourly chart here in the NASDAQ. If you're a position trader, I'm sorry, because it's not easy right now. And there's a lot of adjusting, and there's a lot of like, well, is it really going to do this? Is it really going to go here? How do I want to position myself? And sometimes you get such a juicy trade, you position. But then the next day, it turns into a juicy mess. So again, it is difficult right now. The prognosis, however, really has not changed in my mind, even as I witness what they're doing and what they're saying. It's actually the market's reactions that are like, wow, we are just overdoing just about everything that we look at, get a piece of. They're flipping these markets all over the place. Now, that produces too much opportunity for a day trader, but I'm glad that it's there. So as a day trader, love it. Please keep the volatility. As an Elliottician, kind of difficult to try to keep up with what they're trying to do because they don't know and I don't know. So I do the best that I can. So two ways I'm going to look at this. I will keep it there, but that would suggest 1, 2, 1, 2. And we're going to go hullabaloo, and we should still fall off the cliff and start to go down. But each time the sellers move in to do it, and you can see the algorithms and the sellers coming in via the computers and how the orders are moving through. Are they sweeps? Are they just, a group or just a consistent sell order that's continuing to push down, and you're counting, going like, okay, 500 contracts, 1,000 contracts, 1,200 contracts, and seeing how big it gets as they push the market. And when it's done, bing, 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 they just take it all back. And you're like, well, what the hell is going on? So again, as a day trader, awesome. As an Elliottician, confusing. Right now, I'm going to leave it as a 1, 2, 1, 2. That would again suggest we continue to do the breakdown. We continue to reject that high or this high. So if we continue to make them, then they're going to continue to be stair steps down, and it's going to be 1, 2, 1, 2. And we should get a little bit more depth of the next one, 3, 4, and then another depth, 3, 4, and then another depth of a 5 to finish that. Or however many times this wants to subdivide inside of all of this. That's the problem. So the moves are larger, even the intraday moves and the inside moves are larger. Just be prepared. So 1, 2, 1, 2, looking for it to go over. Why should it go up? Beyond me. At this stage, beyond me. But we still have that resistance at 13,082. And then I'm going to say 13,097, 13,100. Above all this, it basically, you're going to have to go out to the daily chart and start looking at that, which is 13,089, right? Got to 82. I don't want to see it above 89. Now we're moving it back to here. So it gets a little bit sticky for the NASDAQ up in here. This is a complete flat so far, the decline and the rally. So we'll see. We will see. Moving averages, believe it or not, look at that. Flat, little rise. And the 8, the 4, and the 20 are the ones playing the game. Over in the NASDAQ, over in the S&P, how about that? It really is the same story. S&P's a little bit cleaner, though, just a little bit cleaner. I'm going to go right down to that hourly chart, get this open so we can take a look at it. We did the same thing today, but you can see it looks a little bit cleaner. NASDAQ is the one that's like, boy, you guys are nuts. NASDAQ was back to it's like, we're going to manipulate Apple to get it started. Eventually, everything participated. For the most part, though, it started with Apple, AMD, Meta, Microsoft, Netflix, for whatever reason today, caught absolute fire. Whether it was the short squeeze, who knows what it was, but this thing was up $20+ all day. So you had Netflix, NVIDIA, and Tesla. They went up, they went down. This index went up several, now then it went down, just doing exactly what it is now. They had to open it up, so they opened it up $25. Now we're just down 7, and you'll see them push it all over the place. So the volatility continues for sure. Over here in the S&P, also the volatility continues for sure. But on this, that's still yesterday's high. Again, same deal. I gave it the sniff test yesterday and thought it worked. Let's take it again. Look at today, still works. So here, I'm still leaving it where it is, but this is 1, 2, 1, 2. What does that suggest? We really need to roll over. We need to roll over. The market needs to go ahead and have full permission to drop and give up these levels because they no longer fit with what's going on. To find fair value now, it's going to have to search around because fair value is going to cease being 4,000 in that area. And then it really is going to find out that it probably needs to secede or just give up 3,900, et cetera, as this thing starts to go lower. So let's start putting some fibs around this. Again, the first one that I'm going to put down is I want to actually come out a little bit more. Let me just pull this open down to here so I can get the whole full minute one. So we're going to put on for the minute third wave, going to start with the extensions. We're going to go there to there. So we have those same levels today, 39.65, given up, taken back, given up, taken back. Pretty wild. So below that, we have 39.32, then 38.98, almost 99, 38.73, et cetera. We have to break 38.50 to get ourselves below 3,800, obviously. But what I mean by that is to go in one fall swoop. Got a little bit of a black hole. It is an area that I discussed yesterday saying that we might get there. And then the break there suggests a greater number of exits in terms of over position hedging or changes, positioning, hedging, et cetera, on the break that level, I think would kick up a gear and we'd see a lot of selling, bringing it back down to 3,800, which would be the next area of where there would be a point of control or thereabouts. So that is the first one. Now, to put down where could this all finish, this is going to be this internal third, right? If I'm looking at it, what I'm trying to work out right now is a sub-minute wave 1. Is that here? Don't think so, because we're not really doing what we should. So I might call this sub-minute wave one. And in that case, we're looking at putting this there, and it'll be purple. And I'm probably not going to go ahead and put the whole thing out there because it would take me a while. And I'm already going to have a tendency to go over. It's going to be in this color. We're going to go there and there and there. So that would be one, and this would be two, and then we do another one and another two. So I can run to see this third, what it should look like. Now I'm going to put it on from there to there to there. Now we see we start to double up, and it gets a little crowded, but let me open it up so we can take a peek. So what we have here is, again, we have the first layer. This is for this minute third. This is for the sub-minute third. And where we come in, we got a 50% down to where this would be equal to that at 39.32. So again, we're kind of getting stopped up here. So I could put another layer on if I needed to, and that's going to go from here to here to here. But I don't know what they're going to do, so I got to leave it open for right now. But then that would put even more into what congestion into all of this. And now you're going to see that the difficulty the market has and how important it is when you get these larger sell orders that push and start taking things through levels where it should kind of find a little bit of difficulty, because there should be buyers that are willing to step in at these various fib levels. So, but primarily, I'm looking for them to plow through all of this, get down to 39.32, but give it up and see what comes in next. Another small, but if you're trading, significant black hole that'll take the market from around 39.30 down to 3900. Dip it below and probably come back and hold this as a point of control for a little while before we turn again and then continue lower. So the reason that I add all these fibs is so because you can see the progression of where the market's going to go. A lot of the sell programs and the things that are coming in that are fed into the computers, they're being attached around fib numbers. So they could get orders, so to speak, to push to a certain level to get that number of futures. So if they're looking to sell 100, 500, or 1,000, and we see sometimes where they're out to sell 1,000 contracts, and so it'll move until it can get that number of contracts. And a lot of times it's going to be triggered where they're going to be resting orders. So just being able to trade it and to follow it makes it a lot easier, but you got to stay very focused on the now, and I'm not using an hourly chart to trade it. I'm using a 2-minute chart or a 5-minute chart, maybe max. And that's how this is trading. All right. So expectations, it continues to go down. Upside, it should continue to be limited to these levels. I truly am not looking for a break above 40.73, but can it happen? Yeah. But look again, we've already come below yesterday's low. It's just an ABC, and we're going to get another run up. Pretty tough to fit into what we did over here, which was very clean. So what it turns into? Another X. And that would then give that space. None of this goes with the next wave except maybe down to here. So we have continual possibilities within the context of this larger corrective phase. And again, let me just move it back out to that 4-hour chart, and you can see it. This may take longer to roll out and play out. And that's going to be even more frustrating if you're a swing trader, because the swings are happening lickety-split. And you get it on, you think you're going good, and you're looking for further, and it stops and runs before you can make a choice and a decision. It is not easy. Where it does become a little bit easier is in day trading, unfortunately. So if you're looking to kind of get in there and make your money, and you have the ability to day trade, not a bad choice right now until this market clears itself up and really does choose direction without changing its mind every other minute. So again, Expectation would be for it to go down, but I'm going to guarantee you if it goes up, I'm going to be there and I'm going to trade it. And we'll be able to figure it out. But right now, I don't know if it's going to be an ABC and it's going to turn into an X, and we're going to run up into another ABC, which may push this upper boundary. But again, not above 41.22. Then I got to push this boundary. And right now, that's pretty firm. It's lasted for quite some time. So in any case, it's not an easy picture right now, but it's not impossible. And it is possible to walk away with some very decent money. Also in the bonds, also in gold. God, gold. Gold is nuts. And gold is even more difficult, but if you can catch these moves, they're pretty incredible. And I'm just going to show you. You catch these moves in gold, they're incredible. Same type of deal. Look at the pattern. Isn't it not exactly the same? Except this one came all the way down and it's running all the way back up. In fact, it did get itself back above 2,000 today. And it probably is going to do it again. This does not look complete. If anything, we come back down. Maybe we even get down to 1975 down in there. But I believe it's going to turn and we're going to break 2014, 15 the next time and keep on going. Gold does have a little bit more positive prognosis in terms of how high it can get before we see a little bit larger or a beating, which we know gold can do, which is like, boom, takes off 150, 200 bucks real quick. That I don't see right now. But these turns and the loosening of that noose on the bull loosens up a little bit. And then it gets tightened. And we get a stronger downdraft. Everything is very volatile. But here again, this is one. If this is two, we're working on the third. One of three. Maybe if even that's it. And if this is it, this is going to be ABC 2 of 3. Roar, roar, roar. So there's going to be plenty of opportunity to trade both directions. So again, how do you want to trade it? Carefully. But it's going to be more, in my eye, it turns more into a day-to-day thing. Coming in with a position can be difficult. How you position yourself is the different story. And you have to have a little bit more insight and how to do it with options and how to hedge with those options, and then how to adjust with options so you can keep your position nice and healthy as it goes through all these moves. That was gold very briefly, but it is putting in some very positive moves. I'm going to end it right there. Next update will be, actually, God, look, it's already Thursday. Our next update will be on Sunday, the 25th. Nope, 26th. March the 26th, Sunday, March the 26th. I will be doing a big picture update on the 25th. Have a great evening and a good weekend.